Good morning. I would like to dedicate this video to one of my YouTube subscribers. I think he is also my student. He has probably enrolled in my video course. His name is Dhasu Jat. Probably comes from the northern part of India. I think from Punjab or Haryana. I don't remember. I do remember having a email chat with him or WhatsApp chat with him uh, maybe 1 year ago. So it's good that I'm hearing from him after more than 1 year. It's like my students or subscribers don't forget me even after 1 year. That's a good thing. But, anyways, coming back to the email, lot of hard work put into this email. He has sent me this email and also some attachments. He's using some checklist kind of a thing which I want to show you. He has also sent me this Excel sheet which he wants me to discuss. Lot of hard work put into the email, so I thought it makes sense to make a video to discuss this email in detail. Again, there are some stocks mentioned in this email, as you can see. So, quick disclaimer: I am a SEBI-registered research analyst. I am I am just an educator. I don't give investment advice or buy sell recommendations. I do not write research reports. So please do your own due diligence. This is only for educational purpose. This is what he writes. Dear Rohit sir, I hope you are doing well. During my Sunday screening for Monday, 8th of September, so today is 8th of September. That means he did the screening on Sunday, that is yesterday. I identified three stocks: Laurus Labs, Medanta, and KIMS, based on my understanding of your videos and the conditions you have taught us to check. Now, Laurus Labs, I've already made a video. I mentioned that the stock does not qualify for a candidate as a candidate for a positional trade because of weak fundamentals, and the market currently is uptrend under pressure. So in uptrend under pressure, I can't take a swing trade. So Laurus Labs is automatically out. It's rejected. Medanta and KIMS I will discuss, but only for educational purpose. Okay. Don't consider this as recommendations. I try to bring out the factors that I look for in a stock before I take a decision to pull the trigger. Let's continue. It would be very helpful if you could make a video on these three stocks, explaining to me and our community of subscribers why my analysis may be right or wrong. I believe this will not only guide me but also benefit everyone in the group by strengthening our understanding of stock selection. Very good. I am also attaching the analysis that I did on my own, so you can review what I might have written incorrectly. Additionally, it would be very valuable if you could explain the reasons why you would accept or reject each of these stocks from consideration. Thank you for your continuous guidance and mentorship, Dasu. So, this is the analysis that he has, screenshots that he has sent. It looks like he has prepared a proper checklist kind of a system. I don't know whether this is a software or some Excel sheet. Looks like a software because there is an export button here. This is a nice way of, having a checklist. Looks very beautiful. But there are some mistakes in this, which I will highlight for you. He wants me to talk about Laurus Labs, Medanta, which is global health, and KIMS. We will come to that. But have a look at this template. Looks very beautiful. So let's look at this. So stage two uptrend, he's doing yes and no. So you can't write stage two uptrend. You have to precisely define what do you mean by stage two uptrend. So you have to mention moving averages there. Then consistent EPS increase. You can't write consistent EPS increase. You have to be very specific. You have to write 3 quarters of EPS growth acceleration. ROE more than 15%. This is not correct. ROE should be more than or equal to 17%. EPS growth rate greater than 25%. This is not correct. It should be written as annual EPS growth more than or equal to 25%. Margins increasing. This is not correct. You have to be more specific. You have to write 3 years, 5 years, 10 years margin expanding. You also have to write margin at an all-time high. So all of these five are wrong, not correct. Price strength greater than 80. Again, this is not correct. Price strength should be greater than or equal to 80, right? Accumulation distribution rating A or B. This is correct. Correct means the term mentioned here is correct. I am not checking yes and no. That you can check later. That doesn't matter. It's just a matter of checking whether the condition is met or not. I'm just mentioning the items that are written here. So this is right. Number of funds increasing, no need to check. See, there are primary factors that affect the stock and there are secondary factors that affect the stock. Number of funds increasing is a secondary factor. I don't pay much attention to it. Even in my orange trading system, number of funds increasing doesn't show up anywhere. Okay. So you can remove this. PE ratio, we don't look at PE ratio. Even stocks with high PE ratio could go up if they are not in late stage, right? So this is written in William O'Neill's book. PE ratio is an important factor, but not as important as the other factors that we talk about in our fundamental criteria. A stock could have a high PE ratio and still continue to go up if it meets our other criteria. So these two you can outright remove. Blue dots of relative strength on the chart rightmost end. This is not correct. Blue dot of the relative strength, it should be inside the base, not rightmost end. It should be inside the base. Consistent sales increase, not correct. You have to mention here 3 straight quarters of consecutive sales acceleration, sales growth acceleration. Earning stability less than 25 is not correct. It has to be less than or equal to 25. Consistent annual EPS increasing, not correct. You have to mention, you have to be more specific. You have to write consistent means last 3 years the annual EPS is increasing. Master score, no need to look at master score because we are already looking at price strength, accumulation, distribution, industry, group rank. So master score, no need to check because it is just a combination of the remaining factors. You can remove this. Group rank less than 40 or getting decreased, not correct. Group rank should be less than or equal to 40 for very strong industry groups. It could also be less than or equal to 100. Getting decreased means it's the group rank is improving. So this is okay. This is not okay. Cash flow should be positive. Again, there's no need to write this. Cash flow and management ownership, no need to write this because these are not primary factors. Most important things are earnings growth, sales growth, 3 quarters of earnings growth, 3 quarters of sales growth, return on equity, margin expansion, the stability of the earnings, and the annual EPS growth rate. These are the most important factors that affect a stock. Okay. These are secondary factors. How much is the management ownership? What is the cash flow and things like that. So 90% of this is incorrect. Okay. So the template itself needs to be changed completely. Another big problem with this template is that there is no categorization like I have done here: liquidity, comparative, market, technical, fundamental. So here categorization needs to be done. Price strength, accumulation distribution, this is comparative analysis. EPS growth, ROE, this is fundamental analysis. All of it is mixed up here. So you have to really separate, you have to make different buckets, different categories of this and check accordingly. So all of this needs to be revamped. 90% of it is incorrect. Okay. Same goes for the other two stocks. So, just because it looks beautiful doesn't mean that it has got utility. It has to match our system. It has to uh, look like a proper criteria that we are checking in five different departments: liquidity, comparative, technical, fundamental, market. There is no discussion of market analysis here. There is no discussion of liquidity analysis here. Red flag, restricted stock, those things are not discussed here. So lot of things to be added, lot of things to be removed, lot of categorization needs to be done. So you have to do a lot of work here. Okay. Then next, he has sent me this Excel sheet. So this is Laurus Labs, Medanta, and KIMS. If you notice, fundamental mistake: Laurus Labs consolidated, Medanta consolidated, KIMS standalone. This is a fundamental mistake. You don't look at standalone data. You have to look at consolidated data. Okay. That's first mistake that you notice. You go to Laurus Labs. Laurus Labs I've already discussed. See, ASM list, we don't need to check. We just need to check the red flag. So ASM list master score, we don't need this. So I will delete this. EPS rating also we don't see. So I will delete this. No need to look at all of this. Price strength, accumulation, distribution rating, group rank is fine. Number of funds or management ownership don't need. P ratio, cash flow, no need. You can check all of this, but you can check all of that here: management ownership, number of funds, but those are not primary factors. Okay. Earnings quarterly, sales quarterly, increasing. So you have to be more precise with this. You can't say increasing. You have to see from which quarter to which quarter it is increasing. From one to second, it might be increasing. From second to third, it might be decreasing. Or from first to third, it might be increasing. There could be dip in the second quarter. So again, this is incorrect. Okay. Now let's come to Medanta and KIMS. Laurus we have already rejected because it is fundamentally weak. Let's go to Medanta, which is global health. And by the way, another mistake, he has not added the 150-day moving average, so that it's easy to reject the stock on MarketSmith itself. You don't need to go to trading view. So one moving average needs to be added here. Okay. Lot of work needs to be done. Trading is a very serious profession. You can't take it casually. You have to do a lot of work. It takes multiple years to become a lawyer. It takes multiple years to become a doctor. Similarly, it is going to take multiple years for you to become a professional stock trader. So you see how many mistakes I have been able to highlight here. So I'm trying to refine his process. There's nothing wrong in making mistakes, but you have to rectify them. Okay. Let's go to Medanta. This is global health. It's asked me to log in again. Every time it is asking me to log in. So since the market is uptrend under pressure, first thing we need to check is whether the stock is fundamentally in our alley. Okay, uptrend under pressure. See, let's forget about the chart. Let's go directly to the fundamentals. I click on consolidated. So there is a dip here, one violation. This is more than 40% fine. So 3/4 of sales acceleration fine. This is not 25%. So two violations in this table. Return on equity is not 17%, three violations. Earning stability is not less than 25, four violations. EPS growth rate is 50% good, but it is above quarterly. Annual is above quarterly. So five violations. So one, two, three, four, five violations. Then annual EPS looks fine, accelerating for 3 years. Then the latest annual EPS is at an all-time high. So that is fine. So five violations here: one, two, three, four, five, and then margin six violations. So margin has dropped from 2024 to 2025. So out of 12, six are not in our favor. So there is no point in checking further because Even if the remaining six are in our favor, it doesn't meet our criteria. We need minimum seven. So Medanta doesn't qualify uh, as a candidate for a positional trade because it's doesn't meet our at least 7 out of 12 of our fundamental criteria. So Medanta is rejected basically. Again, don't take this as a recommendation just because I'm rejecting it. And if you're holding the stock, doesn't mean that you have to sell the stock. No buy sell recommendations, disclaimer, no investment advice, no research reports. I am just showing you that if a stock is fundamentally weak, I will not even bother looking at the chart. Okay. Then what was the next stock? KIMS. Now let's check KIMS. Let's go to consolidated. See, I will click on consolidated so that I can check the fundamentals. I'm not even looking at the chart. Okay. Now you see minus 9%. You remember our evergreen filter. We'll go to breakouts. Okay. This is our evergreen filter. You see fundamental filters. Latest quarter sales growth should be double digit. Latest quarter EPS growth should be minimum 18%, 18% or more. This is as per William O'Neill's book, the EPS growth, not the sales growth. This is my input. But you see EPS growth, you need minimum 18%, right? Look here, is minus 9%. Would you buy a stock where the latest quarter EPS growth is minus 9%? Would you do that? Right? Think about it. No, right? So, but let's check our fundamental criteria. So, this is not 40%, so one violation, and it is decreasing, so two violations. Here it is decreasing again 27 to 26, three violations. This is more than 25, that is fine. So, three violations here. Return on equity, fine, more than 17%. Earning stability, this is a violation. It's more than 25. So, three violations here. This is number four. This is number five because annual is more than quarterly. So, five violations here. EPS growth rate is more than 25%. That's fine, but it's more than quarterly. So, total five violations, one, two, then here three, four, five violations. Here, number six, from 2023 to 2024, there is a drop in annual EPS, so six violations. So, I really don't need to look further. Six out of 12 are gone. So, even if the remaining six are in my favor, it doesn't meet my criteria. I need minimum seven, right? So, even KIMS is gone. I wouldn't bother looking at uh, you know, the liquidity, comparative market, technical, and all those things. That the stocks might be technically strong, but fundamentally they don't meet our criteria. So it's a clear reject. It's very simple. Okay. So since the market is upturned under pressure, my system automatically keeps me away from stocks which are fundamentally weak. Correct. So it automatically protects my capital. You might think that Rohit, I'm not getting any trade. Your criteria is too strong and things like that. But you fail to realize that this system is working for you perfectly fine, especially when the market is upturned under pressure. This system is keeping you away from stocks which are not fundamentally up to the mark. You tell me that if a stock is good enough, how can it not meet at least 7 out of 12 of our fundamental criteria? I am not saying that the EPS growth has to be 40%. I am not saying that the sales growth has to be 25%. All I am saying is that even if it fails on EPS and sales growth, why not at least meet the other criteria? Right? I am not, my criteria is not rigid, it is flexible. It allows for five weaknesses. Out of 12, even if there are five weaknesses, it could be EPS growth, sales growth, that is still fine. But if a stock is fundamentally good, it has to meet at least 7 out of 12 of our fundamental criteria. Otherwise, I'm not interested. If the market were in a confirmed uptrend, we might have considered these stocks. And I'm not even looking at the chart and the base count and all of that because that is technical. Okay. So when the market is uptrend under pressure, my entire emphasis is on the fundamentals. because I don't want to risk my money with a stock which is fundamentally weak, that too when the market is up and under pressure. When the market is under pressure, the fundamentally weak stocks will are likely to fall. Okay. So to summarize overall, first I would like to give gratitude to Dhasu for writing this email. A very good email. He is accepting the fact that he could be wrong. He is accepting the fact that it could be incorrect. Okay. And in the subject, he had mentioned he needed a video feedback. That is why I have just copy pasted the email here. This is my video feedback. This needs to be revamped. Complete revamp is required here. Okay. The system can look as beautiful as this, but it has to be in line with our criteria. Thank you so much.